Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday, March 29th. We'll just kind of cut into the economic news releases today and start off with the Case-Shiller home prices. January's readings were another 1% down, same as prior. And a little additional news on that. Of the 20 homes, only two cities in the U.S. out of the 20 cities actually showed gain, and that was Washington, D.C. and San Diego, California, showed some a little bit of advancement on their home prices. Another item here is consumer confidence dropped big time from 72 down to 63.4. That's a huge drop from the previous month. Haven't seen that for basically about the same time last year when there was a big drop from consumer confidence. Stock market's up a little bit today. Fed member Bullard, who's not a voting member this year, but he's out of St. Louis, made a comment regards to that the Fed might, may not wait for, may not wait for economic to really improve, or at least macroeconomics, before they start getting kind of tough on things. Regards to which kind of strengthened the dollar. The traders, of course, like that for that trade on the currency. The dollar kind of strengthened those comments. But there'll be more scheduled Fed members later on in the week, and obviously they're going to be watched heavily as to what they say, where the direction of the Fed will be going, because about 90% of the analysts out there think that the Fed will basically keep the Fed funds rate basically close to zero until August. So, and then of course the quantitative easing too is supposed to be completed back in June here. So these are all things that kind of keeping us basically, as one analyst put, the dollar as a whipping boy. So hopefully it will strengthen things up for the dollar. Also, Syria, they basically are kind of sounds like they might be kind of caving in. 32 members of the cabinet are basically in the midst of resigning during the protests that have been happening over there. So it looks like some actions being taken place in Syria today. So let's take a look at the bond market today. We didn't really close the gap yesterday, but we did. And then today we kind of started lower today. So we actually started the day about where we were, and then we've been kind of dropping a little bit. We'll see how much of the resistance or floor this will hold, if this will be able to hold us. And then if this could hold, we could see a nice floor of support here, and hopefully be able to work our way upwards back to the mid-level of the 102 range here. So right now rates are down today. And so mortgage rates are a little bit worse than what they were yesterday. All right, folks, you guys have a great day.